Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me is Vivek Iyer. It's turning out to be a very volatile session. We were speaking about it getting closer to that 25,000 mark, but we are off around 100 points from the highs of the day. But yes, it's the earnings that continues to be in focus and some profit booking from the highs.
Some profit booking, we just touched the 25, just about to touch the 25,000 mark before we saw a bit of profit booking coming in. Quite a lot lined up on the show. Let's start off with the top headlines. A volatile afternoon session for the market. Key indices recover from the day's low, even as 25,000 remains elusive for the Nifty. PSU banks and realty are the big winners, while FMCG and IT drag. Mid-caps outperform.
Bandhan Bank climbs on a dip in slippages and a positive outlook. Management tells CNBC-TV18 that they will see advances picking up in the next 3 quarters and loan growth will be in the range of 16 to 18%.
Sumitomo Chemical surges in trade after reporting strong Q1 numbers. Revenue surges 16%, while EBITDA doubles on a year-on-year basis. Management says favorable market sentiment and stable input costs have been the primary growth drivers.
OMC surge after UBS upgrades the stocks to buy and raises target prices. Meanwhile, Petroleum and Natural Gas Regulatory Board has revised transportation tariff for LPG to 100% on railway tariffs, which analysts say is positive for oil marketing companies in the near term.
Well, welcome to Midcap Radar. Markets have been extremely volatile, and at this point of time, what we're looking at is actually the Nifty slipping from the 25,000 level. It didn't hit it, but it was very, very close. We have quite a lot lined up on the show, and the first up, since this is Midcap Radar, we have Hormaz standing at the wall. Hormaz, which are the top midcap movers today?
You said you saw profit booking from higher levels, but I'm pretty sure the bulls would not be wanting profit booking from 24,999.8, and that's where the Nifty has reversed from. But sticking to the broader markets, there are plenty of gainers from within that space, and earnings reactions continue. As you highlighted, Bandhan Bank is now up 13%, its biggest single-day move since July of 2020. Sumitomo Chemicals also having a good day, and City Union Bank and J&K Bank also seeing gains of anywhere between 4.5% to 6.5%. And some PSU banks are the top sectoral gainers in today's session. PNB is also an earnings reaction, mind you, 7% higher on PNB. Bank of India, Bank of Baroda and Union Bank also seeing a positive rub-off from these earnings from PNB. Railway PSUs are staging a bounce back. RITES is up 11%. The board meet on the 31st to consider a bonus issue of shares. IRCON, RVNL, IRFC staging a comeback, all of them at the highest point of the day with gains of anywhere between 5 to 7%. Stocks on the back of volumes, and Adani Wilmar came out with results 6.5% higher. That spike after the result announcement. Equitas, Small Finance Bank, an opposite reaction, but with large volumes, 4.5% lower there. And lastly, some broader market losers: Lakshmi Organic, Emphasis, Suven Pharma, and Latent View not having a good day at the office today.
All right. Thank you so much, Hormaz, for joining us with that list. But let's get talking about individual names now. Keynes Technologies, the first management on the show, reported a mixed set of first quarter numbers. Margin was a miss despite having a strong revenue growth. Jairam Sampath, the director and CFO at the company, is joining us now. Mr. Sampath, good afternoon. Thank you so much for joining us. Well, it's been a strong growth, and you're guiding for a similar growth in FY25 as well. I wanted to know what will the drivers for that growth over an already high base would be, and what about margins? Do you think that could come under pressure, or is that something that you will be able to maintain?
Yeah, thank you. Thank you for having me on the show. Good afternoon to everybody. So fundamentally, the first quarter is a small quarter. It's about 15-16% of the total year. So you don't get the kind of operating leverage that you would get in the other quarters. So there is an actual increase in margins while you go through the year. That's the first thing. The second thing is our business is based on order book. So what it would essentially mean is that already the orders are in place, and it's a matter of execution. So in short term, we can pretty much with certainty say how much revenues that can come in. The third thing is, since the order book is with us, we can pretty much compute the kind of margins that are likely to be there, and that's what is reflecting in the guidance that we have provided.
Okay. Mr. Sampath, you've given a target or a guidance of 60% revenue growth as far as FY25 is concerned. Q1, you've seen close to 70% growth. Margin expansion, you've expected, almost 100 basis points. Are you sticking with both of that? While revenues have been higher, margins have actually slipped on a sequential basis too.
Yeah, it was expected. In the first quarter, as you know, this was the election quarter, and we didn't have too much of activity happening in the government procurement sector, which actually drives some of our OEM sales. which are especially in the railways and other large project areas. So we are pretty confident that this is back on track now that the first monsoon session also will be concluded now and budget is also done. So you can look forward to some good, exciting times ahead.
Next thing that the street is watching out for, Mr. Sampath, is the OSAT or the PCB approval. By when does that come in? Because most of the analysts have not factored it in their target prices or their earnings estimates. What is the timeline looking like here? You've not used your QIP proceeds yet as well. So any timeline that you can give a sense of here?
It should be happening anytime. So of course, when I say anytime, this is in the last penultimate stage, when it goes to perhaps a cabinet committee or so. So we're not very privy to the exact processing inside the government, but suffice it to say that it's in a very short time frame, the approval for the OSAT is likely to be there. We have also purchased the land in Gujarat, and we have kept all the other project-related activities, collaborators, team, everything is ready. And so that we understand that there have been a couple of months behind schedule on this particular thing, but I think we probably will catch up so that we do our revenues in Semicon by say FY26 fourth quarter. We start, giving some significant revenues.
Mr. Sampath, please correct us if you're wrong. We understand that the current order book is standing at slightly over 5,000 crore, with an average order inflow per month of close to 480 crore. Can you sustain this particular order inflow growth? And on the back of that, FY25, where do you expect to close, or how do you expect your order book to stand at?
Yeah, so what happens is order books expand faster when large orders come in. And so it's you must see our estimate is that by the end of the year, we'll be at about 5,700 or so. The order book will be about 5,700 crores or so. So some of the big orders, especially in the industrial area, have already come in. So that kind of pushes up and temporarily makes it look as if the monthly order rate has gone too high. But actually, this is at a very steady pace. And this year, based on this order book, of course, one can say for sure that 3,000 crores of sales revenue should be definitely possible. And we'll see probably the second half of the year whether anything better is feasible.
Okay. Mr. Sampath, how much of it will come in from exports? Currently, it's around 15% of your revenues. Are margins higher in export markets? Second question is on the working capital. It has reduced, but do you think it will continue to be above that 100 days mark?
Yeah, so the working capital is also a function of the first quarter is always, it's like a post-lunch session kind of a thing. It comes on the back of a very busy fourth quarter. So obviously all the parameters look a little bad, but it picks up during the year. So I think working capital is in the right direction. We have actually stocked up a little bit. So in absolute terms, inventories have gone up. And since we had a busy quarter, so a little bit of, first quarter, a couple of customers, some delays, etc. But I think in the receivables front, so we think that this all gets sorted out. And by the end of the year, we have projected about 10 days reduction in our working capital, net working capital cycle that we will do. As far as the exports is concerned, in the short term, you don't see much changes because right now the entire business is driven by a very strong tailwind in the domestic sector. But all the new customers that we are onboarding, there is a fair bit of export content. So by the end of the year, you can start seeing some large exports happening. And then also FY26, I think we can expect a little larger share of exports than the current 10-15% kind of number.
Okay, Mr. Sampath, that's all the time we have with you today, but we'll have you once again on the show to discuss when you do get the OSAT approvals. Let's now slip into a short break. The management of City Union Bank joins us next to discuss the Q1 numbers and more. Stay tuned. City Union Bank is buzzing in trade today. The bank's asset quality and deposits saw some improvement on a year-on-year basis, while net interest margin contracted. To discuss this and more, we have Mr. N. Kamakodi, the MD and CEO at City Union Bank, joining us. Good afternoon, sir. Thank you so much for joining us. It's a good quarter and the street is cheering that. First up, we understand that after a while, albeit on a low base, you've actually seen loan growth on, coming to the double digits. While that is commendable, can you sustain this for the rest of the year? And the second question, sir, is that when you're talking about deposits across the industry, gathering deposits has been a bit of a concern. So where do you see deposit growth trending forward?
Actually, till let's say COVID, pre-COVID period, we had almost 2 decades run when our growth rate in advances was about a couple of percentage point more than the industry average growth, and there was some pushback during the COVID period, which we are trying to get back now. Last year, we had a certain amount of, let's say, implementation of the digital lending processes and all, which have started yielding some results already. So the year as a whole, there could be some amount of, let's say, fluctuations on the quarterly basis. But year on the, if you look back to our credit growth by December 2022, we had an annual growth rate of the previous year of about 14%, which, let's say, came down because of some changes and all. But now things are in the growth path, and we have touched a double digit for the June. Hopefully, we are trying to push it, let's say, more and more towards the for the end of the current financial year, and we hope we should be in a position to take it forward to the next level.
Okay, so when
and we feel for the go ahead.
Please go ahead, Mr. Kamakodi.
The basically, like, our next target will be to align our growth rate in tune with the growth rate of the industry, is what I mean as the next level. And we hope we should be able to push the deposit growth also to align with that of the credit growth without having any issues. That's what we see, and that is what we are trying to achieve and demonstrate going forward.
So your loan growth will be in the double-digit mark in FY25, Mr. Kamakodi. Can we assume that?
Yes, that is for having that only we are trying to move, and our internal target is to achieve the industry growth rate for the financial year 24-25.
Okay, so Mr. Kamakodi, while you've spoken about advances and you've also spoken about deposits, currently, what is the cost of deposits? Because we understand that there is significant competition in the marketplace for gathering or deposit accretion. And secondly, we've actually seen some NIM contraction that's come about. So going forward, where do you see NIM trending?
Basically, like, you had a major change in the regulation that, like, till 31st March, like, say, whenever there is an overdue for the, like, say, accounts, you can charge a penal interest. But from 1st of April, the penal interest had to go for the penal charges. That's why we had about, like, say, some reduction in the, like, say, interest income. I mean, because of that, the reduction in the net interest margin, which actually moved as the other income per se. The cost of deposits, we had about, it was scoring between 5.7 and 5.75 between the fourth quarter last year and the current quarter. In fact, there was a 3 basis point reduction in the cost of deposits for the first quarter compared to the previous quarter, that is fourth quarter last year. We feel by and large the cost has stabilized, and overall, in terms of both the cost and NIM, they should be around the same level as we move forward, is what we expect at this point of time.
Okay. There is a dip in MSME lending and there's a rise in the gold portfolio. Is there any segmental focus? We've spoken about it earlier as well. And also, how are credit costs across segments? You said it is expected to be stable, but if you can give us a segmental view of this.
Actually, like, if you had, like, say, I had checked the numbers for a year before last, we had about 1,000 crore slippage, which reduced to about 1,000 crore for the financial year 24. About 300 crore reduction was there, and this year we expect a similar trend to continue with the reduced slippages. And overall, for the last 4-5 quarters, the recoveries from the NPAs have stabilized over and above the slippage, which we expect to continue for a few more quarters, is our current expectations. The NPA numbers, the asset quality numbers are very much holding up.
Mr. Kamakuri, last question, we're pressed for time. There have been a couple of statements from RBI. Number one, in terms of the CD ratio, and number two, there have been issues in terms of draft provisioning norms for liquidity coverage ratio. In both of these cases, how will it impact you, and are you comfortable at current levels?
Basically, in fact, this question came during the analyst call also. We expect the LCR for the system itself to stabilize somewhere between 115 to 125 or something like that. Let's say some amount of reorientation of the asset book will happen going forward. But we also think that we should be in a position to, let's say, fully comply with that by minor changes, and we don't expect any major issue. But let's say there were some changes in the calculation of the LCR. Earlier, we had let's say declared let's say some of us we had about let's say substantially higher at closer to 200 and all, which because of the change in the circular and the let's say reclassification and change of definition and all of us should be stabilizing somewhere in that 115 to maybe 120 in that range, and we should be comfortable with that. Should not be an issue on.
All right. Okay, Mr. Kamakuri, thank you so much for joining us today and giving us the outlook for the bank going forward and general industry trends as well. It was a pleasure speaking with you. That's City Union Bank, but it's time to slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned for that. Welcome back. You're still tuned into Mid-Cap Radar. Markets, they continue to be volatile. Nifty is just up 12 points right now. It has come off again. Then it tried to go higher from those levels. Mid-caps are doing well today, but that index, of course, has come off from the highs yet again. Bandhan Bank is one stock you should keep an eye out on, because in a market like this, it's been seeing a one-way move. So 13% higher on that one, on the back of management commentary, earnings as well. And as you were mentioning, Vivek, a lot of earnings. They're coming in thick and fast.
Earnings coming in thick and fast, like you mentioned, Bandhan Bank, City Union Bank. Remember, these banks have actually been laggards. City Union Bank giving us quite a bit of strong guidance on the back of that, the stock trending near the day's highest point. But that's all the time we have on this edition of Mid-Cap Radar. Your stocks when we return.